Okay, everybody, it's a few minutes past 9. I'm chuckling a little bit because there's not a whole lot going on, and I had a couple of phone calls. So this is getting up on the, I think, the third or fourth video I've made. There's not a lot happening today. And if you remember last week, I was talking about, let me shift to a daily bar. I was talking about how the momentum in the marketplace will quite often take a little while to get soaked up. And you can see that Thursday the market was going nowhere. And I said that Friday might be a second day of nowhere trading as the market is soaking up the buyers getting ready to head back down. That didn't happen. And you can see that there was a big move to the upside as the market broke through this high. And that actually was an expected trade. We took that trade to the top. Now the market is hovering near the psychological level of $2. And there are a couple of announcements that are coming out this week. In fact, the U.S. rate decision is coming out on the 28th. That's something that you're going to need to watch. And I'm sure that the market is going to be, the pound especially, is going to be reacting in a very slow fashion until that announcement comes out. Because everybody wants to see, what does the Federal Reserve say about interest rates? What do they say about growth? All of that is going to be wrapped up on the 28th, and that's going to be Wednesday. But you can see that the market is giving us some clues. Let me go back to this 4-hour bar here. One of the things that I was looking at here were some of these resistance lines, and you can see that the market is actually trading. Let me put this on this high and this high. You can see that these two prior highs have been instrumental in reversing the market. You can see here, right around the first part of June, actually I think this was the 1st of June, the market came up to that level and declined very, very rapidly. But here's what was interesting to me is that the market is now trading and is locked in between these two levels. This is very common when the market gets into one of these resistance zones. And you can see here, this is exactly why I look at zones for support and resistance rather than just one point. So if the market does manage to break above this $2 level, we're going to be seeing a move probably into about the 60s or 70s, and then above that into about the 130s, if it can break higher. But at this point, there's not a lot going on. This is not a very good flag pattern at all, just because of the different volatility. You can see here that here would be the pole, and then you can see normally the flag would run across like this, but you can see due to the volatility in the market, you've actually got more of an expanding triangle than a flag or a pennant. So we're just going to have to wait and see how this thing forms up. We're going to have to see how the market reacts to the news later this week, and before we start making any kind of decisions, even for breakout trades or trend continuation trades, there's just not a lot going on.